Olalekan Olabode is a banking analyst with Vertiva Capital Management, one of the licensed securities and investment firm on the Nigerian market. He's live with us here in the studio. Lekan, thanks for coming.
Thank you.
We appreciate your time, and we apologize for dragging you away from the weekend. Yes, so what are your key thoughts ahead of next week MPC meeting?
The expectation of the market generally is that they're likely going to hold rates. The reason for this is that in the last MPC meeting, we saw that there was a rate hike, and this was on the back of the fact that the CBN wanted to focus on his key goal, which is price stability. We've seen inflation significantly on the rise. It's been rising since October 2015, and the last result that was really 17.6% was about the 10th consecutive rise we have seen so far, and this had actually put pressure on food prices and a lot of things. So the direction is that we expect that the CBN is going to remain focused on its key assignment, which is price stability. However, we have the growth story also on one side, meaning that we've seen 2 quarters of significant declines in Nigerian economy, putting us in a recession mode. And in the bid to support that, we expect to see stimulus from the monetary authority and also the fiscal authority.
Those who will be watching this Monday, Tuesday meeting with the banking sector, you're a banking analyst. Talk to us for about 1 minute about the expectations in the market. You'll be watching not just the monetary policy rate, but you're watching the cash reserve ratio, you're watching the liquidity ratio as well. Those are key parameters that will be watched closely on Tuesday. Okay,
market expectation in terms of liquidity ratio, we don't expect anything to change the liquidity ratio. It's been like this for a very long time now. We expect it to remain the same. For the MPR, which is usually the key policy that people actually look out for, and that's where I said that generally market expect that there's going to be a hold rating or a hold decision. Some people believe that it should hike, while some other people think that there should be a cut. We really don't think there's going to be a cut, because in the last meeting it was raised by about 200 basis points. If we see a cut, I think it's going to be showing consistency in what we are seeing from the monetary authority. So I believe we're likely going to see a hold decision. Okay.
Well, I just want to ask very quickly, because we have about 2 minutes. As far as the market is concerned, what are expectations as to whether central bank do something or decide to do nothing?
Again, I say that the market expects that central bank is going to do nothing, particularly.
That's a bit of a consensus, is it?
Yeah, that's a bit of a consensus. That's the general expectation from the market, do nothing. But that said, we expect that the rising inflation is going to continue to be a worry for the monetary authority. We've seen a series of mop-ups in the last about 2 to 3 months. We expect that to continue. However, we note that the pressure we've seen on inflation is really not a demand-driven pressure, it's cost-driven pressure. And for that, we expect that a lot of focus is going to be placed on exchange rate. We want to see more decisive policies on exchange rate, so that we can get a stable exchange rate, and that can actually impact inflation numbers.
Whatever happens, you think 1% this week from the stock market side looks like, well, what are we looking at for next week?
I think for expectation for the stock market next week, market will continue the seesaw trading pattern we have seen in recent time. We are going to see a few days of gains, and after gains you see sell-offs again, and you see a number of people coming to the market again to take advantage of low prices. I don't think anything has changed in the macro space. So there's no catalyst particularly to drive the market.
No any strong earnings. There are expectations.
No earnings expectation. Noting that of course we are getting close to the end of September. We will start expecting Q3 numbers.
Third quarter, 9 months, 9 months, and that will be very key. Once you have the 9 months, you can always mirror what the 1 year will look like.
Yes.
Thank you very much. We appreciate that.
You're welcome.
We appreciate it. Thanks for coming through. Olalekan Olabode, who is a banking analyst at Vertiva Capital Management.